see, does it do this? Does it run up into this fair value gap there? That's this here. There's your fair value gap. And what is it doing there? Does it at least touch the consequent encroachment or midpoint of that gap? Look closely. No, it doesn't. It gets real close to it, but it doesn't. Let me see if I can make it a little bit bigger. See? Just falls short of it. The fact that it goes up there and doesn't touch it and then closes here, I know that that right there is a bearish order block. I can trade after the next candles come up and bump in the bottom of it. I'll trade short there. All it has to do is move away from it and then come back up into that. I can trust this candle not being overtaken. What's the next candle do? Goes up to it, but doesn't touch this line, and it doesn't even breach the candle's high. Now, if it would have traded up and touched that midpoint and then did that, I would not have taken that trade. I would have waited for another attempt to get in there and work just a little bit above the consequent encroachment, and then I would try to go short in this upper part there. That's what I would have done differently. But because it didn't and couldn't even touch the consequent encroachment, these are PD arrays. And yes, they're used for very specific and static levels to enter and exit on. But I also use these same price points as a means of measuring strength and weakness. If this candlestick can't even touch that, but gets close to it, it's signaling. It's a signature. That's an algorithmic signature. For someone that knows what they're looking for, that tells me that when this candle closes, all I need to do is see it move away and come back up and touch the bottom of that, and that's a bearish order block. Yes. Now, with that logic, I can be short and take a partial below here, or if I know that I can trust that it's going to go down below the London lows, then I'll put a limit order below that. And then I could sit and explain to my son that I think it may go down to those lows, but I'm positioned now that if it doesn't need to do it today, it'll probably go down there in the London session tonight. Where? To the new day opening gap down here. So with all of that narrative explained to you, let's put the executions back on. There you go. So now we have the market displaced below the bearish order block. This candle here, we open and trades up. There you go. It trades up, touches it, goes short. There's your low. What's the low of that candle? Look right here. See that candle's, see that price right there? Right above my cursor. That's the low. What's the low of the candle? 18,320 and a quarter. Okay. The fill, 18,321 and a quarter. So as it's bumping into that, I'm selling short right there. And I want to see it aggressively run below here. It does. Go back for a second. The fact that we traded up here and we didn't touch the consequent encroachment of this, I like to see if there's two fair value gaps, because we have here and we have here. You have to at least anticipate that it may go up into that higher one. But if it fails at the lower one's consequent encroachment and there's a news driver coming, I have no problem, no fear of absolutely none of getting into the trade. If I did it wrong and I get stopped out, I've shown executions where I've done this. My students have seen it. It's on my YouTube channel. It was on Twitter. You've seen me get stopped out, and then I go right in there and I do another entry and it pans out. Or if I did it wrong and I know that my direction was off and I'm offside, I reversed and did the other direction, and then the partner just goes the other way. That is going to come by experience. So invariably, if I address or field the questions that come to me, a lot of these questions will be answered with your own experience, and it's an unfortunate cop-out sounding response, but that's the truth. You're gonna feel comfortable doing certain things that you aren't going to be comfortable even imagining doing at the beginning of your stages of learning. So I wanted to see this stay open. Okay. I wanted to see it fail to get to that midpoint of the lower one because it failed there. Okay, wonderful. I'm not worried about it. But go back to what I was saying. If it would have touched the consequent encroachment in this candle, I would have anticipated trading up into the higher part of this. And then my stop loss would have had to be above the midpoint of this consequent encroachment. You see how this gave you everything that is logic based. It's this is your guidance. These are the things I've already taught. They're in all the discussion points of everything I've ever taught on this YouTube channel. All these things, unless I said my students have never learned that, everything else has already been taught to you. But because you didn't write anything down and you didn't take notes and you're just falling asleep to it, because a lot of people use me as a lullaby and they just listen to me and go to sleep, which is fine. You know, whatever. I'm glad I can help you sleep good. But everything I've taught, unless I'm saying to you, this is the first time even my students learned it, I'm expecting you to already have it in your journal, in your points of understanding what these things are expected to tell you.